Don't hate me cause I'm beautiful. Alright, what did today wind up doing actually? I want to see. Oh, we did get that reversal in lunch hour, so yeah, it wasn't. I mean, we still got it. I had a feeling, but yeah, it was giving S&T. Okay, shitty price action, but I mean, all right, this is exactly why I stay on till 1 o'clock right here. We got the reversal at 1, and we ran down to 2 of my targets. Now, I didn't take this trade because I already took 3 trades. I ended the day profitable with $200 on these little scalps. So let's talk about it and why. So we got not really a 10 a.m. reversal. It kind of was a PM reversal. It didn't really push until after 2 for real. But we did get a reversal at 1. That's why I marked 1, because I usually will stay on the chart until 1. And I had a feeling we were going to reverse, but I already took 3 trades, so I didn't want to wait. But let's talk about what happened. So we got on the chart 10 o'clock. Okay, this was a 15-minute fair value gap. We tapped into it and reacted off of it. I waited for the full candle to close, which was that's yesterday. That here, okay, here we go. This candle closed here, this hammer candle. I got in, but on ES we swept these highs, and then NQ we did not. This is the same highs, so we had S&T divergence. So I was hoping NQ was just gonna go and take out these highs. It's literally triple equal highs here. Like liquidity was resting there, high, like great as fuck, right? But with the S&T sitting there, I just thought it was gonna reverse at any moment. So I took this trade and I had a stop loss at break even, but I wanted to just lock in profit. So I think I locked in like $110 on this trade. I should have just left it, because then I could have rolled it up. I got in again on this trade, and then I sold once this candle, because these candles were also very crazy. It was terrible price action. Like, I know it looks clean now, but all these candles were ass. I made $10 on this trade, and I made $70 on this trade after we inverted this fair value gap. So we inverted this fair value gap with this blue candle. I took it up to the wick, and I just had a feeling we were going to reverse. And I sold, thankfully, really quick. It was so fast, and then we sold off. Then I was like, I want an inverted fair value gap under this 15-minute. And I was like, it wasn't happening. We were trading. So I wound up getting off the chart at 12. But I was like, we're going to reverse, and we did in the afternoon, which is fine. I have $200 on shitty price action. Now I noticed though, if you traded on the 1 minute chart, which I want to go back and get better at trading on the 1 minute chart, you do have a nice liquidity sweep here, the internal one, and then you took it down to sweep out this liquidity here. So that's a nice trade on the 1 minute. I'll show you what it looks like. I know my chart looks crazy. I'll actually delete everything right now. On the 1 minute chart, it was this inverted fair value gap here. Candle close here, so the trade would have been, so it's still technically a 10 a.m. reversal trade if you wanted it, and you could just took it to this liquidity right here, made at 940 for almost 1 to 2 trade if you wanted it. I just felt like if we were bouncing off that 15-minute fair value gap, we were going to run up the rest of the day. I wanted ES to run and take these highs, then NQ follow, which it does sometimes. So S&T is kind of hard, because sometimes you'll be like S&T, but then NQ would just catch up to ES and vice versa. But that's why I took the scalps, because I was like, we could reverse. We could never hit those highs, and we never did. We never hit those equal highs, y'all. So it just was a day, and we just traded very sideways. And in the afternoon, we got the rundown like I wanted, which was the reversal. So if you waited for that reversal, good for you. Like I said, a lot of us traded this shitty price action and honestly came out profitable. I'm not mad at that. I honestly wish I would have took this trade or right out of the 15-minute fair value gap. But again, we already got our 10 a.m. liquidity sweep with that 1 a.m. reversal. This liquidity sweep of this internal high here that I was like, obviously, again, I wanted to go up here and we never did. But we got this liquidity sweep, so I was like, I wanted it to inverse this 15-minute fair value gap first, for I'm really confident in buys. It never did. We played off of it. So playing off of it, I thought we were just gonna run, and we did not. We didn't even take profit. I should have held that first scalp I took though, and maybe had like a $400 day. But again, shitty price action. Sold in profit. Someone on my live took the trade with me, and they let their stop loss at break even, and then put in a trailing stop. So that was very smart of them. But like I said, this is SMT, and that's the only thing. If it's SMT about to happen, and it's like you don't know if it can just reverse at any point, just take your profit. I did think this bounce was going to be a good bounce, but see, why did I do that? Once we inverse this 15 area gap, like right there too, it was perfect. Obviously at 215, so that's not when I trade. Then you could take the next candle down. So we're just going to keep back testing. This is what I'm talking about, the minimal drawdown. The minimal drawdown strategy, where you're sitting here, the first candle fully above or under the EMA, take it 2 candles, and you can just full port and get funded in one trade. That is the move. And you need to wait for displacement on the 15-minute. And we just never got it. You kind of got it here at 9 o'clock. And even the 9:30 traders, it didn't really give y'all an entry. You just had to either just buy when you got in and take it to that liquidity point here. But like IFEG are inductions. What is an induction? What do you mean by that? Green is IFEG? No. Okay, yes. This is an IFEG once it's crossed. So I mark my fair value gaps as green and red because that's how you know the direction. So if it's respected once, you want it to go higher. If it's inverse, you want it to go lower. So basically, once we inverted this, we're going lower. Yes. And then obviously for the red ones, once we close above, we're going higher. If that makes sense. That's a inverted fair value gap. Inducement. I don't trade inducements, so I don't know. It's just, for me, it confirms a market structure shift. And it's usually the displacement for market structure shift. I feel like, isn't inducement taking out liquidity? I don't remember what inducement is. I don't trade it. But yeah, and then we had a bunch of targets. We had liquidity here. We had a whole bunch. I did not think we were going all the way down here, so I marked 1, 2, 3, 4, 5. I left the fractal on just to see how it reacts to price action, because everyone's saying use the fractals. And it's pretty good. Like your 1 a.m., your 1 minute reversal. I keep saying 1 a.m. Your 1 minute reversal was called with the fractal. Our trade was called, even though I got in confirming on this candle, which is good. I took this candle. I just got scared and went to pull back. It called a sell here. Obviously, this sell is not great, but it called a sell here and a sell here. So with the EMA. So we're going to backtest that tonight. We're going to backtest this full port strategy with the EMA still and the fractal indicator. Exactly. This is ES. So he said it seems similar to the inverted fair value gap on the right. Yes. So you should be watching ES and NQ, because that's how we got our SMT divergence. If you know what that is, NQ did not take out these highs. ES took out these equal highs. You see what I'm saying? So that's how we knew we were reversing. Like I said, I wanted to wait. I wanted to see if NQ was going to push, like ES pushed. But it did not. NQ did not want to break those highs. So we knew once ES was ready to reverse, NQ was going to follow. That's why they're the same. That's why you should watch them at the same time. We didn't have a fair value gap on. Oh, we did on the 15-minute. I could have sworn when I was trading. Oh, no. Yeah, this green fair value gap is the one that wasn't made on ES on this candle. These are the same. These up here. But yeah, you want to watch both, because then you can know where it can reverse from. And ES is honestly the stronger one today. I don't switch between the two. I try, but I just don't like to. I just only trade NQ. But there are days when you figured out how to use fractals. No, I see why people use them, but I don't necessarily just know why y'all use them. Like, someone told me to use them to get my entry, and I don't see why I would get an entry. Now, I would enter, and I've been trading on the 15-minute chart a lot lately. It's kind of bad. It's not bad, but I just feel like on the 5-minute, 1 minute, you can get faked out. The 15-minute tells you exactly what it wants to do. I would have gotten in on this candle. Fifth break, we got market structure shift, not at this point, obviously, but market structure shift caught these 2 displacement candles. So we're gonna keep back testing that on today. I did not take this trade, obviously, way after my time. Once I get better and comfortable, I probably will trade all day, because that's what a lot of people do. Once the better they get, but I just don't want to. Or if I move back to LA, because LA it's 6:30, so I could trade 6:30 to whatever 12 or 1 and still have my whole day, versus trading 9 to 4. But again, that's something different. So let's keep back testing. I hate this. I know y'all like this better, but this black with, I don't know how to change this white around it. All right, yeah, fractals looks crazy on this too. That's also trading sideways, that's why it looks that bad. But let's go to the next New York session. 15-minute chart. We have our 9 EMA. Okay, these are the things, and you want to catch these candles like this, a minimal draw. I mean, this drawdown is not the nicest, but a minimal drawdown if you're trying to full port. But you want to go in it with, you want to go into the trade with all your confluences, all your liquidities marked, all your fair value gaps marked, all your things marked. So you're not just getting in some random ass trade based on indicators that are delayed. For those who don't know, if you trade just EMAs and stuff, I know a lot of people make money with them, but they're delayed data. So versus you knowing how to react off of current data, it will help you either get better entry or, whatever. But it's like, do you need to? Like, look at this. That's beautiful. Look at this. Again, if you want a full port, you want minimal drawdown. Now, I don't, like I said, I know people called my live yesterday talking crazy because they were like, that's so irresponsible, I'm not saying anyone should do this, but I'm just saying you should practice things with FX replay, and or like I said, if futures prop firms are going to charge you again anyway every month, you might as well try something. And again, if you don't want to, you don't have to. But you should not be full porting like this every day. But a lot of people, when they make money, scalp like this. Like, we're not just full porting and just like, but if this wants to be your scalping strategy with proper risk management, this could still be your strategy with proper risk management. So we do have a small fair value gap here as well that we already tapped and respected. So if we invert it, it lines up with this liquidity. I hope we bounce and go higher. But if not, you can take it to this fair value gap or this one. This is our 10 a.m. Let's play. That's what you want. You want a reaction. Now, Fractal did tell us to get in. I don't use Fractal. If you're a Fractal person, you know what I'm saying? I'm still trying to learn how it helps with my trading and how it goes with it. We technically don't have a market structure shift yet. We do have 2 nice candles. You could go now on the 1 minute or the 5 minute. Wait for a market structure shift, which we got liquidity sweep. We do have a market structure shift as soon as we broke this high at this candle close. This is a regular trade, and that's why I said, like, this strategy, you're gonna trade as regularly as you already do. It is before 10 a.m., so we probably won't get an entry till way up here, but let's see how it plays out on the 15-minute, and then we'll see what the displacement looks like. It actually lines up with the 15-minute. See how usually time frames line up? Like, we went on the 1 minute, and the best entry we got on the 1 minute was still, where you would enter on the 15-minute, which is nice. We love when that happens. And we lost the trade immediately. We immediately lost the trade. And this is why I was saying I want to trade, instead of just market structure shifts and regular liquidity sweeps, I want to see if we get, like, play off displacement. Yes, your entry would be so much shittier, but displacement is really what tells you the direction we want to go. So this displacement candle is now confirming that we want to be bearish. Let's see if it keeps going bearish. Okay, kept going bearish. I did say that, though. I said if we invert this fair value gap, we're going to the next one, which we did. So it would have been a day, you had your bias. But this green push And I've been noticing that, and this is a prime example of when I talk about not trading before 10 a.m. You know, that happened to me on yesterday. I got in before 10 a.m. It pulled back, stopped me out, got me a better entry. The entry we should have waited for, because we would have traded at what? 10 a.m. 10 a.m. gave us the candle to go lower. You see what I'm saying? You see why your rules are important? Like, yes, obviously you could have been like, oh, we're going down, we're reversing, whatever. 10 a.m. gave us a better entry. It gave us an entry in this gap. It confirmed we want to continue lower. And then you could have played, we touched this EMA, fractal hit, and drawdown. Just playing this. You see what I'm saying? So you see why your rules are important? Because I literally did this the other day. I'm like, oh, we're obviously going down. We're literally going down the rest of the day. Obviously, let me get in. And then stopped me out. Gave me a super better entry. Came into a 15-minute value gap just like this. And then ran down. I did get back in and made my money back. I ended like $400 in profit that day or something, which is still good. But I would have had like an $800 profit if I followed my rules, didn't take a trade until 10. And if it runs down, continues at 10 or reverses, like you'll know. The displacement will show you. You know what I'm saying? So that's what you gotta do. You should backtest the 10 a.m. reversal to become a master. What do you think? Yeah, that's what we're doing. That's what we're doing. If you're from the USA, what broker are y'all using for gold trades? I don't trade gold. So any gold traders, let her know what broker you use. I feel like we do have a lot of gold traders. I read reversal happens at 9:55 to 10:10. Is that true? Yes, that's the macro time. However, I noticed that I can still get faked out in the macro time. The 9:55, it's really 9:50 to 10:10. I did trade the macros before I moved fully to 10 o'clock. Because see how this, you could have got faked out by this. You could have played a reversal, and that's why I waited till 10, because you can still get faked out at the macro times. And I want to trade at a time where I'll get faked out the least. So that's what it is. And this is still a 10 a.m. reversal. That's what I want y'all to see. Like, I'm not adding a new strategy. It's just saying like how you would if you went to full port. You need to wait for a more displacement of your trade. And honestly, that's how I want to trade anyway, because like I said, I keep getting faked out. I have days where I don't, but I don't like getting faked out. So I'd rather wait for the displacement for, yes, we're actually going to reverse, or no, we're going to continue. Like, I want to play off displacement now only, instead of just getting a good entry. Like, yes, if you got in way up here somewhere on the 1 minute, that's a beautiful entry, but you don't really know where it's going to go until we displace below. You see what I'm saying? And I'd rather take this trade and just take that long candle down, or maybe even get in up here, maybe not up here, but like up here, and just get in when the market is sure. Because you could be right, but the market can still want to go a little higher before it goes your way. It could want to, chop a little bit before it goes your way. It's so many things, especially if you're an options trader, the chop is going to eat your time decay. What up, Tay? But yeah, so that's what I'm doing. Because I know it looks like, oh, we're backtesting different strategies. We're not. We're backtesting different ways to trade this 10 a.m. hour reversal. Because as you see, this is your reversal. It pulled back to give you a reversal back down. Now, you don't have to trade that. We've been expanding at 10 a.m. all week. So you wouldn't trade it at all this week. But I love when it pulls back to give me a nice reversal, because you still got a pullback. And then we got a market structure shift back to the downside here. And we got a market structure shift back to the downside here. And we tap back into it for like a breaker trade. I know a lot of people trade breakers. You could have came back in, boom, gave you two chances, boom, and then you take it to downside. See what I'm saying? So I like that. If it's going to continue, I'd rather it tap me in and come. Obviously, the other day did the same thing. I got in somewhere down here, stop loss like above this high or something like that. And then it came at 10 a.m., gave me a better entry, stopped me out, and then I got back in once we displaced for like the same entry, which is crazy. And then obviously it ran down and gave me my loss. And then this is the reversal though, because like I said, this is 10 a.m. You could wait for just the reversal if you wanted to. Like we got it today, it did not happen at 10. It was trying to reverse at 10, but it took its sweet time today. But I think we bounced on this for value gap to maybe go higher. Let's see. But there are obvious days where, boom, it's just a red day. So you would have just not traded this day, or you got two pullbacks to play reversals off of on a lower time frame. Like you rather it do this and tap you in for reversal versus just running straight down, because then you can't really. But you can play reversals off this. It pulls back. People do it all the time. It sweeps internal liquidity. Boom, give you a market structure shift to go lower. Still a 10 a.m. reversal. It's a continuation reversal, but still two options for you to get into trades with your strategy, with two market structure shifts, all that. Like not just fake continuation plays. Like boom, we came back, we made a market structure shift back to the downside here. Boom, came back, pulled back up for you, and you got in the trade here for whatever, 1 to 3. See what I'm saying? So still two good reversal trades. 1, 2, 3 actually. And that's why I say don't get in before 10 o'clock. Because most of those ICT traders are stop losses above the previous high. You got stopped out, and then sometimes 10 a.m. just gives you a better entry for what you already know is going to happen. So let's go back on a 15-minute though really quick. And let's look at. So this is actually a perfect full port. 10 a.m. is here. Boom, 10 a.m. candle. You could either gotten on it somewhere before it closed, or even just gotten on these 3 candles here, or even could have waited for this second candle. And you could have full ported and got funded. That's what you want. You want space between the EMA. You want it to go with your overall bias. You don't just want to get on here and just once it breaks the EMA, you want to trade. I mean, if you're an EMA trader, that is how you trade. You know, it came back. If you're a break and retest, that's how they trade. You know, it comes down, it taps the EMA again, then they play it. But we're ICT traders, and that's why I said I don't mind the EMA, because the EMA works well with ICT. We call this back up into a fair value gap. The fair value gap entry is the EMA tap entry, double confirmation. So I'm saying, so it's like, and the fractal. If you're a fractal trader, all 3 of those confluences lined up for you to get in the trade. See what I'm saying? So great. And here you could have full ported on these 2 candles, because you don't need much. If you're full porting, you're risking a lot. So you probably would already been funded somewhere in the bottom of this candle. You wouldn't even have needed it. Again, do this on your own, or risk a regular amount and just take a nice 1 to 3. You know what I'm saying? Like, it's not even, it's like a 1 to 5. Our stop loss have been tighter than that. You know what I'm saying? It works out perfectly. Like, you still want to trade the way you would trade, if that makes sense. If that doesn't make sense, don't even do this. Don't full port. Because like I said, a lot of people, y'all be like, don't do this, don't do that. And a lot of people do this shit. Obviously, once they have millions of dollars, like if you have $1 million from trading, you can full port $5,000. That's nothing to you. And if you make 30 grand off that, like that's like what Mamba FX does if he's not scamming and he's actually really trading. I'm sure, you can risk 10 grand when you have millions of dollars, and you can really be like, oh well, I shouldn't do that again. You don't do it all the time, but you do it every now and then. We do have a liquidity sweep and displacement off of it. We have sell side liquidity here. And we have a bunch. So I'll just mark them all. They're all pretty close. You pick the one you want to take your profit at. It honestly might come down here before we even get to 10 o'clock. So, which I feel like is going to happen. If you're a 9:30 trader though, a good candle to full port. But we're not really below the EMA yet, so maybe not. See, why I said maybe not. Because then you'd have full ported, came back, and you'd have been throwing up. We did get our liquidity sweep, though, but it's still not 10 a.m. It's still not 10 a.m. Okay. I don't know what it wants to do. I think we do want to continue lower. We didn't. I wish we would have wicked and then came up to take out this buy side. So this buy side, the one that made after we swept this. But we did sweep this overall liquidity, so bearish. It's kind of obvious we're bearish, but we've also been running up, so we could go lower sweep and then keep going higher. Yeah, well, I don't know if I can. That's why I'm going with the bias. People are like, are you bearish today? Are you whatever today? No, I let the market will tell you where it wants to go. You just gotta jump on the bandwagon like that. I don't even Sheesh. Okay. Probably. I mean, we did about to sweep London lows, which are equal. I mean, let's see. I'm still indecisive on this because it could reverse from here. You know, we're in 10 a.m. now. Again, this is the 15-minute chart. So if you wanted to go on the 5-minute or the 1-minute chart, you could have played this. We came up into a gap. If you were confident, it did bring us back in up at 10 a.m. This is why I say you don't have to get in early. It brought you back for a great entry at 10, and it lined up with a fractal. Great trade. And let's see how far it goes. I mean, you could take it to probably Asian lows. Like I said, I'm not doing this. I'm gonna full port my MyFund futures, but I'm not my top step. That's a good trade. It's a 1 to 4. And it did take out the Asian lows. Now let's look on the 15-minute though. So like I said, this is how you would trade it every day. Every day you should be trading your 10 a.m. reversal like this. Not full porting. Regular risk management. Now let's see on the 15-minute. I mean, this is a nasty candle. That would have scared you, honest to God, for full porting, drawdown. But let's see how it plays out. Yeah, you still could have got in and played these two candles. You probably would wait for this candle because it's indecisive, got in, sells, played these two candles, and closed your trade if you wanted to. But again, on our regular entry, we have a beautiful, beautiful trade. And another reversal if you want to play that. Let's see if it actually reverses back up for us. And nope, a bearish day. So this is what I'm talking about, because I used to say that on my back testing, like, yo, like, how do we know when it's going to continue and how do we know when it's going to reverse? And lately this week, I've been seeing how to play continuations. I've been seeing how it's kind of obvious, like it's going to be a lot of displacement. It's going to tap you back in and it's going to run down immediately. Like the 10 a.m. candle is going to be like a hammer candle, and then you're ready to get in, even if you got in like here with your stop loss above the candle, that the 10 a.m. candle, you know, like you will know if it's a continuation play. And this is why you mark your liquidity points, because we already swept this very prominent liquidity at 9:30, and lately this week that's what's been happening. Like 9:30 people have been getting the top of the candles, and us 10 a.m. people are just need to catch the train all the way back down. So if you're playing just the 10 a.m. like full reversal, like you're waiting for it to come down to here and reverse from there, you wouldn't have got many entries, or you would have gone down to the 1 minute and played this as like a scalp. You know what I'm saying? So I'm like, because it's Johnny, you can watch his videos. He was talking about how 10 a.m. either reverses or expands, and you need to know when. And once he said that to me, like I was like, oh, I get it. So for me, if we are already at a liquidity point, I'm just gonna wait for the liquidity reversal. If it happened like 10 minutes before I got on the chart, I'm usually gonna play the expansion. I love it when 9:30 does a reversal, and then 10 a.m. we almost, like one day we almost came like up to sweep it. Like it gave us a beautiful entry, like almost the same entry, if not a better entry than 9:30 people, and then we ran down the rest of the day. Or there's days like this day where you just have to get in. You just have to get in. I think this was 9:30, 9:15, yeah, and then 10 a.m. candle was here. So I think after this displacement, I got in the middle of this candle. It did not give us an entry, and I know someone on my live was like, how did you know to enter? I was like, I just knew we were going to daily lows. There was no entry for us. I just didn't want to miss out on the money. That's a me thing. You did not have to trade this, obviously. And we did not get a reversal after that. It just ran down the rest of the, traded sideways the rest of the day. I think that was Monday. See, last week we got all them reversals, which was nice. Like liquidity sweep, reversal at 10 a.m. We got so many. And then this was a perfect continuation for us as well. We got a liquidity sweep here, and then by 10 a.m. we got in. We didn't get the bottom, but we got a good entry still. And then I took it to equal highs. So this was a good trade there. We got a reversal a little bit, and it was like in the macros, like 9:50 time. And then here was another day we got This was what I was talking about. When I got in early, I got in somewhere down here, and then 10 o'clock tapped me in for a better entry. I got stopped out, and then I got back in the trade here. So 9:30 got the original, liquidity sweep run, and then we got ours. And how I know we were pushing for a daily low, and we were tapping into a daily fair value gap. So you still have to have your bias when you're trading, because there are days where it's going to be obvious that you need to continue, and there are days where it's obvious you need to expand. And even so, you just don't trade. If you don't want to trade these expansions, you do not have to trade them. Yeah, you might sit out for a week, or you might want to get on at 9:30 that week or something. And even then, wait, this is 9:15. 9:30 is here, so you honestly would have gotten down here anyway. So our entry was better at 10 a.m. because you would have waited for the 9:30 candle to close. We got a better entry at 10 a.m. Then we ran down the rest of the day, or the rest of our session. So that's going to come with experience. I just started seeing that, literally this week and last week. So I was just like, there's just no way I can only trade reversals. There just has to be a way, because there will be weeks I don't trade, which is fine, but I don't want to do that. I don't want to not trade. So this is a new day. Let's go to the 15-minute. Like I said, the 15-minute is my favorite chart. We do have equal highs up here. And then we have a low here, and then we do have a 15-minute fair value gap, a bullish one here. So then you wait for it to inverse this or bounce out of it, if that makes sense. Since it's bullish, you want it to bounce in and go higher, or if we inverse, we're going lower, even though this move is not that nice compared to this one. But however, there might be another lower one. You might have to go to a higher time frame to see how much lower we can go. We do have equal lows here. We kind of already swept them. We already swept these equal lows, so it could be a sign to go back higher. And then the next liquidity is far, and we have another fair value gap on the hourly now, so a way higher time frame than 15-minute to tap into to reverse. So it's giving, it wants to come down and go higher and fill this gap up here on the 1 hour. But again, you just mark things out on the top and the bottom, and then let the market show you which way it wants to go, and you'll take it to whatever on top and the bottom. That's how I trade. If that makes sense, let me know. If it doesn't, it doesn't. But yeah, I don't go in saying, oh, we're bearish, there are days where it's obvious. There's some days, again, where it's just so obvious. Today, it was not, to me. I did want the 10 a.m. reversal, but today I was we had equal highs up here on ES as well. So I was ES pushes up, I want NQ to push up, and NQ did not. And it was just a day where, listen, you just either don't trade it, which I think a lot of people didn't, and then some of us did, and we made some money, and that's okay. Alrighty, play. Alright, well, we bounced out of this beautifully at 9:30 out of this, and looks like we're going for these equal highs. I guess now we'll get our 10 a.m. reversal. So that's why you don't really care about the 9:30 trade, because it'll either give you a better entry, or like I said, it did give a nice run up for the 9:30 people, and then hopefully we get the bigger trade of the day. We'll take a reversal from here and take it all the way down to this hourly fair value gap. Wow, this is a 30-minute. So on the 5-minute, we don't have any signs of a reversal fully yet. But if you want to risk that turtle soup, that is a very small stop loss. And someone keeps asking on these lives, how do you do turtle soup? Well, I only do turtle soup is if we get a wick. So a turtle soup is it's like you're catching just the wick of a trade. You're not waiting for any market to shift. You just sniper entering. And for me, I needed to sweep liquidity, go back into the range, and the wick above the range is small. Because there are times where the wick is big, there's times where it's a wick, but the body of the candle closes out of the range. Like, I don't like that. If it's a small wick like this, we come back. But I've took turtle soups, and the next candle stops me out and goes my way. That's why I say I only do it if the stop loss is tiny. Like, it has to be a tiny stop loss. Because look at that, a 1 to 10 trade. Again, turtle soup is something you're just going to master on your own. Just like being a sniper shooter. You can't ask a sniper shooter in the military how to be a sniper. You got to just take a gun and practice. And it's something that is a skill that is super nice. Dang, we bounced off that for right gap again. So 2 stop out. But I think we're going higher. Let's see. Yeah, it's just trading sideways. So this is the day you would have cut your losses though. As soon as you see it bounce out this gap, you would have took your gains here. This would not have been a day for a full port. And this is why you don't. But it's a nice turtle soup if you took it for 1 to 5 because the stop loss is so small. Once it bounced out, you would have sold in profit. Or you would have let it play if you want to let it play, and you would have got stopped out for a very small loss. That's why turtle soup, I only take it if it's like super, super tight. And a turtle soup is something like, let me see if I can draw one. So it's like, you have a liquidity point, and it trades up into it, and then immediately, oops. I did not mean to stop it there. It immediately runs back down. So that's the turtle soup you want. Where like, so your stop loss is tiny. You know? That's not working. But, because today on ES was not a turtle soup. Yes, a lot of us knew it would reverse from these equal highs, but it traded up a lot into it. You don't want that. For me, I needed to go up and immediately back into the range like this candle. But then if you turtle soup this, you would have got stopped out. That's why like it's a certain je ne sais quoi when you know when it's gonna turtle soup. I mean, if you were trading today, you would have known this was not turtle soup. It was trading so shitty today. Each hourly candle today was so indecisive for like 2 hours up here. See, it was very indecisive up here. So no one knew what was going on until we finally displaced down. This was the run up at 9, and then we just shitted, wasted everyone's time, and then it went down. So you would have known not to play a turtle soup. But if you can catch this candle and it goes just straight down the rest of the day for reversal, that's nice turtle soup. But that's why it's like you don't need to take them. But if you want to, you only want to wait when the stop loss is really small, or just don't take them because you don't need to. You can wait for the displacement. But yes, let's do one more. So there's still a good 10 a.m. reversal, in my opinion. Again, without the turtle soup, though, you would not have taken this trade. There's no market structure shift. There's nothing. It came down into this gap, and then it reversed. Maybe you could have played, again, another turtle soup or just an entry off this hammer to take it back up. Whatever you feel, there's no like market structure shift, displacement. It's not really a big movement, so you just would have had to sniper it and scalp it or not trade it that day. And there's nothing wrong with not trading that day. So there's nothing wrong with that. And this is why I backtest the way I do. Only turtle soup if it's bought below or sold above. Period. I agree. Can't see. What can't you see? Turtle soup is buying below a low or selling above a high. No, turtle soup is a liquidity point. Well, yeah, selling. Wait. Yeah, buying below a low. Yeah, it's the liquidity sweep, and then you buy in the opposite direction. Yes, that's exactly what turtle soup is. But I'm just saying how it looks and how to catch it is what I was explaining, not what it is. All right, let's mark out some liquidity. Like I said, obviously the full port, you need to wait for a beautiful setup, a beautiful run, because you only need one candle. But again, you don't have to full port. You can just like, I'm over leveraging a little bit on my account now, doing 4 micros, even 5. And that's enough to make $1,000 a day without any losses. So you don't really need to full port. But I've seen people do really well full port. Even I've seen TJR full port. I've seen people trade news in full port with Apex and my funded futures. So, especially with Apex, it's so cheap. Like, you can try it. But obviously, once you get the account, you need to go super lax. Don't just keep. But then yeah, once you get $1 million, you can be an EMA trader. I know a lot of people who trade EMA. Look at that candle close above this tapped. Now we got this red candle above. That's your buy, and then you just take it 2, 3, 4, 5, 6 candles. Boom. That's how some people trade. And if you're risking $5,000 and that little move takes you to 15, like, it doesn't matter. It's just when you're a beginner trader, you need to focus on real good A+ risk to reward setups. But I know a beginner trader on Twitter who does 1-to-1s only. That's all he trades is 1-to-1s. He doesn't even need a 1-to-4 or anything. That's what he likes to do. So again, to each his own. You'll find out what you like best for yourself. If you actually like that full port strategy that I've been doing as a regular strategy, hey, do it. I feel like we don't get in until we're sure on that strategy. And yeah, you'll lose some, but all right, I didn't mark 10 o'clock. It's a lot of weird price action for those who don't know. This looks very weird. So this is one you just really let it play out. We're already in this red fair value gap here, if you need to see it. So I guess we can maybe see if it plays off of here. Not great price action, but maybe it'll go zoom, zoom, zoom. I don't know. But let's see. Alrighty. Not 10 a.m. yet. Boom. 10 a.m. First candle below this EMA. Obviously the 930 traders got the high. Continuation to this liquidity. We have enough space for this liquidity for you to get in that trade. Now let's see if it gives you, it does not give you anything. So you either would have gotten in right at 10 a.m. or you would have waited for this 10 a.m. candle to close. This is not, or you could wait for the liquidity sweep under here if you want to wait and be confident. Let's see if we do get a liquidity sweep and go up. It could. Let's just see. This is why we backtest, because we want to see. We want to see how much of a losers or winners we are. Boom. Boom. Love that. And then we got a nice displacement off of it, which is probably the better trade. But let's see, because it could continue lower. And it does. See, there's just days when you know it's going to continue, and you'll get a nice displacement. You'll get, it's hard to understand. I get it, because I literally this just clicked for me this week. It's something like in the gut that's telling you, like, we're not reversing. I know it's 10 a.m., but we're not reversing. And you just gotta be like, hey, I don't want to trade this. Or you want to be like, hey, I do want to trade this. And let's look at the 15-minute chart. Boom. 10 a.m. candle, candles below. This would have been a beautiful full port trade. You could, you know what I'm saying? You see what I'm saying? You see what I'm saying? Does that make sense to you guys? Like, how the EMA, it is a database, past database indicator, so I don't like trading solely off of it, but it does help you know when to hold your trades. Like, obviously we sell at liquidity, so like on this EMA trade we would have sold at this no matter what. However, or even these equal lows. However, say you got scared and wanted to sell early, the EMA is so far, there's no reason you should have sold before this low here. Like, yeah, you might have got scared and wanted to sell here. You might have got scared and wanted to sell here. But the EMA having that space lets you know to hold the trade. When you see space with the EMA, it helps you hold your runners. Elliott Trades used to do the same thing. Honestly, I don't know what the fuck happened to Elliott Trades. I do hope he's okay, alive and well. He just went off the face of TikTok and never came back. So I hope he's doing well, because I really liked his content. Last time he started doing crypto, and then I feel like, I don't know after that. So hopefully crypto didn't like burn his pockets. But yeah, a beautiful trade. Like I said, full port, because full port, again, you want minimal drawdown because you'll get liquidated. So say you took this trade, it came all the way up here, not stopped you out though, and then went your way. If you full ported too much, and this is like negative 3K or negative 6, whatever your drawdown is, you blew your account. You see what I'm saying? So to make sure you're not full porting too much where you get liquidated, but you can do enough where you can get funded in a day or two with a nice move. That's all. So now that we've done this for 2 days, I don't think we need to keep doing this. We'll continue tomorrow, and we'll go back to regular 10 a.m. reversals or continuations, because now we see how sometimes there's weeks where we only get continuations and we need to learn how to play them. This one was an obvious, you could have waited for the 10 a.m. displacement candle to finish and got in on the 5 minute. Let's see on the 1 minute what it would look like. On the 1 minute, you would have waited a little bit, and you could have waited for maybe one of these to get broken to the downside, or just got in on this pullback here that tapped into a fair value gap. Would have been a nicer entry than waiting for the 10-minute candle to close if you're a 1 minute trader. So your entry would have been as soon as you just had a limit order set at that fair value gap, waiting for it to come back in and tap. So we'll go back to just trading this because we need to learn how to do continuations as well. But I don't know if to y'all, does it seem obvious? I feel like to me, I'm starting to see how obvious it is if it wants to reverse or it wants to continue, especially if we run through. We did not liquidity sweep this. We ran through it. And this is why you don't trade before 10 a.m. because you could have thought this was a liquidity sweep by these green candles. You could have thought this was a liquidity sweep to reverse back up. We wait till 10 a.m. 10 a.m. gave us a nice move. We have a nice liquidity point to target afterwards to get in this trade. You know, if we're already close to this line, like the liquidities are super close together, then you would wait and see if it reverses. But if not, you can take this as a nice trade. Or you could have not traded today. There's nothing wrong with only trading the reversals. I just noticed that there's, like last week, we had reversals every day, 5 for 5. And then this week, we had continuations every day. We'll see how tomorrow goes. Monday is a holiday, so I will not be trading. The market closes at noon for the stock market. And then I'm sure the futures market might run. Ninja Trader sent me a notification that even the futures market might close at 12. Either way, do it that what you will. You can trade. If you trade futures, you can trade holidays. I've done it before. The price action is less volatile, but I've traded like MLK 3 years in a row on accident. Every year I forget it's MLK day. And then I'm like, why is it not going to my TP? It'll be like trading sideways like this, but it'll be in profit, but it'll be like not at my TP. And then I'll be like, wait, it's a holiday, and I'll close the profit and then just get off the chart. But there are other holidays where the market does really well, even though it's a holiday for the stock market, but futures market, it's still clean price action. It might just be a smaller move, but it's still clean. But I'm not going to trade Monday. I am trading tomorrow. Yeah, I'm up $700 on my funded account. So good, that's good. I have to make $3,000. Yeah, we'll come back tomorrow. So I don't know if y'all like that full port strategy. It's not even a new strategy. It's trading the exact way you would, but you just wait for displacement on a higher time frame, and then you wait for it to go the first candle under the EMA, and you just take it for a candle or two. When you full port, you do not need all these candles. You really only need like 1 or 2 candles. That's all you need, and you'll do it. And again, there's something you can play with. You don't have to play with it. You can get funded the normal way. I know a lot of people have full port and they try to get funded in like 3 or 4 trades, which is kind of like how I'm doing right now, which is pretty much normal. Like you risk more than you would when you're funded, but you don't have to fully full port. But I know Kimmel trades full ports. A lot of people full port, and that gave me the idea to do the same. And I've done it once, but then consistency rule messed me up. So, but if I was on Apex or something, I would have been Gucci. But yeah, I'll see y'all tomorrow. We'll go back to backtesting this, but like I said, this is just clear signs of 10 a.m. we're expanding. So 10 a.m. sometimes you just won't get your reversal, and that's fine. You just have to either play with it. You can either wait for EMA tap if that's what you want to add. You can add a confluence. And that's why the EMA and the fractals come in handy. They come in handy on where to enter on a continuation play when we don't get a market structure shift, reversal, like we don't get a nice pullback that reverses. It helps you, once you tap this line, get in sales again or whatever, just find something else to help you get in a trade. But yeah, I'll see y'all tomorrow. 9:55 a.m. Eastern time for live trading, and then tomorrow night 8 we'll back test like this again.